Thanks for coming to Momentum Trading Group trading class. This is going to be a class on momentum. First thing we're looking at is we're looking at the S&P 5-minute chart. And we're going to be talking about how we measure and look at and understand momentum. So like we discussed in previous lessons, we look at the slope of this particular line, which again is the 300 period moving average on the 5-minute chart. If you look at that, you can understand that the slope of that line is down. So you can see that on again, that represents the 50 period moving average on a 30-minute chart. So that would tell us that the overall slope of the market is moving lower on our prevailing trend. So you can see we've got a downtrend. You can identify that right here was where that broke in the pre-market session. Prior to that, the momentum on our time frames, and this is typical when we're overnight, had been pretty flat. So that would give us our first indication of what the momentum on our longer term trends are down. From there, we identify our prevailing trend, which in this particular case is the green moving average, and you can see that, the 50 period moving average, which is red. You can see the slope of that line is also pointing down. Now, when we look at that, what we always want to remember is what is flat, what is neutral. And if we identify what neutral is, we then can look at this and identify the slope and say, relatively speaking, the momentum on this primary trend is down, and look how accelerated that is. But notice as it gets closer to the end of the day, this line starts to level off. So you can see the slope of these lines. This is pretty consistent over price. This one comes down and starts to level off. And then our shorter time moving average, which is the 10 period, you can see the major acceleration to the downside. It levels off. You can see how these shorter term trends, and then towards the end of the day, it levels off pretty straight there. So you can see how we have slowing momentum on this particular time frame right there. And you can see how that coordinates to these moving averages there. So whenever we're looking at moving averages, again, we're always remembering what is equal or flat momentum. So if we're taking a look at all of our momentum lines, let's just keep this into perspective here. We're looking at this, and this is flat. That's flat. Then let's compare the slope of this line, the slope of this line, and then more aggressively, the slope of that line. So you can see relative to our different moving averages, these being equal, you can see the slopes of these that are shorter time, major drop in momentum here. So we can see that. So pre-market, we started this move to the downside. This would basically have been the indication that we would start seeing weakness in momentum. And always remember that whenever we look at momentum, that fear is always a stronger instinct than greed. So if we compare this same movement to what we had historically, or we'll actually just go to yesterday, because yesterday was the opposite in direction. When we talk about the momentum of yesterday, again, starting back with our sloping, our momentum line, recognizing that that is neutral. You see the slope of this particular line there is going to be gradual. Oops. Gradual. See the slope of our red line, prevailing trend, still higher relative to neutral, but still flat. And then you see our short-term trends, which are right here. And you can see the momentum of those movements. Now, what we look for is we look for trading in the direction of the red line if we're above the purple. This tells us that we have upward momentum. And then we actually prefer these pullbacks. So an example is as this is coming back into this zone here, this would trigger a possible entry. As this is coming back in there, and then potentially coming into here, but this being the end of the day, it would not have triggered an entry. But you can see how, relatively speaking, those are the potential areas that we look for. So upsloping on the red line, price above that, and then coming down on our short creates the lowest risk entry as it relates to momentum. So primary uptrend, intermediate and short-term, or the short-term downtrend, those give us our ideal entries. Now, as it relates to momentum, and we're going to talk more about this later, is if you look at this movement here, and then you compare that to this movement here, that gives us a pretty good indication that we're going to see this measured movement back up to the upside. And then coming into the end of the day, you can see how we've got neutral price action. So that's going to be our first way to use moving averages as a gauge of momentum. And we're going to talk more specifically about price in the next moment.